Will Bitcoin hit $100,000 in 2026? Research suggests that Bitcoin has a reasonable chance of reaching $100,000 in 2026, driven by factors like potential Federal Reserve rate cuts, increasing institutional adoption, and the ongoing effects of the 2024 halving, though volatility and macroeconomic risks could hinder this target. It seems likely that if market conditions improve, such as with dovish monetary policy and renewed ETF inflows, Bitcoin could surpass $100,000, but predictions vary widely among experts. The evidence leans toward an optimistic outlook, with many analysts forecasting $100,000 to $250,000 by year-end, based on historical cycle patterns and current on-chain metrics indicating accumulation. Key factors influencing the prediction. Bullish drivers. Lower interest rates could boost liquidity, encouraging investment in risk assets like Bitcoin. Institutional interest, including from pension funds and corporations, remains strong despite recent outflows. Bearish risks. Persistent inflation, regulatory uncertainties, and geopolitical tensions might cap gains or trigger further corrections. Historical context. Post-halving years have often seen significant rallies, but 2025's negative return marks a deviation, adding uncertainty. Expert consensus. While not unanimous, a majority of forecasts from sources like Nasdaq and Changelly project prices above $100,000, though some like Kraken's conservative models suggest lower figures. Potential scenarios. Optimistic case. If Fed cuts rates multiple times and ETF inflows resume, Bitcoin could hit $150,000 to $250,000. Base case. Gradual recovery to $100,000, $130,000 amid stabilizing markets. Pessimistic case, stagnation or drop to $50,000 if economic headwinds persist. This prediction acknowledges the speculative nature of cryptocurrency. Always conduct personal research and consider risk tolerance before investing. Comprehensive analysis of Bitcoin's potential to reach $100,000 in 2026. As we delve deeper into the question of whether Bitcoin will hit $100,000 this year, it's important to examine the multifaceted factors at play in the cryptocurrency market. In 2026, Bitcoin finds itself at a crossroads, trading around $67,000 after a significant correction from its 2025 peak of $126,000. This analysis draws from a wide range of expert opinions, historical data, on-chain metrics, and macroeconomic indicators to provide a balanced view. We'll explore the bullish arguments supporting a surge to $100,000 or beyond, the counter-arguments highlighting potential roadblocks and realistic scenarios for the remainder of the year. By the end, you'll have a thorough understanding to inform your own investment decisions. Current market context and Bitcoin's position in early 2026. To assess if Bitcoin can reach $100,000 in 2026, we must first understand its current state. As of February 19, 2026, Bitcoin is priced at approximately $67,473, reflecting a 0.16% daily increase but a broader 45% decline from its all-time high in October 2025. This correction has been characterized by orderly deleveraging rather than panic selling, with the cryptocurrency market cap stabilizing around $2.4 trillion. Trading volumes remain robust at over $36 billion daily, indicating sustained interest despite the downturn. According to Yahoo Finance's BTC USD history, Bitcoin closed at $67,473.45 on February 18, 2026, with a high of $68,332.81. The year 2025 was historic yet challenging for Bitcoin. It achieved a new all-time high of $126,198 in October, driven by institutional inflows following the 2024 halving and spot ETF approvals. However, 2025 ended with a 6% return, marking the first negative post-halving year in Bitcoin's history. This anomaly was attributed to ETF outflows totaling $8.5 billion since October 2025, persistent core inflation at 2.5%, and a risk-off sentiment amid tech sell-offs and geopolitical tensions. According to Bloomberg's article on Bitcoin's performance since October 10th, roughly $8.5 billion has flowed out of U.S.-listed spot Bitcoin ETFs. Despite this, on-chain metrics show resilience. Whale accumulation has added roughly 53,000 BTC in recent weeks, and stablecoin market caps stand at $307 billion, signaling potential sidelined capital ready for rotation. According to Equity's Crypto Hub report, whale wallets added roughly 53,000 Bitcoin in the past week, helping stabilize prices. For Bitcoin to hit $100,000 in 2026, a 48% increase from current levels, it would require a catalyst to reignite bullish momentum. Historical post-halving cycles suggest gains often materialize 12 to 18 months after the event, placing 2026 as a potential breakout year. However, market maturity means returns may be more muted compared to earlier cycles, where gains exceeded 2,000%. According to Fidelity Digital Assets' 2024 Bitcoin halving 1 year later report, 1 year post-halving, Bitcoin's price performance was muted compared to past cycles, but with stronger fundamentals. The Fear and Greed Index, currently at extreme fear levels, around 8 to 10, indicates oversold conditions, which have historically preceded rebounds. According to Advisor Perspectives' cryptocurrency update, Bitcoin remained below $70,000 for the week, down 23% year-to-date, with sentiment at extreme fear. Geopolitical and economic factors add layers of complexity. Ongoing Middle East tensions and U.S. policy shifts under the Trump administration, including the nomination of Kevin Warsh as Fed chair, have fueled uncertainty. A dovish Fed could lower rates, boosting liquidity and risk assets like Bitcoin. Conversely, hawkish policies might extend the correction. According to Reuters' report on Bitcoin's slump, Trump's selection of Kevin Warsh as Fed chair fueled the latest rout in cryptocurrencies. In this context, $100,000 appears achievable if positive catalysts align, but it's not without hurdles. Bullish arguments. Why Bitcoin could surpass $100,000 in 2026. Several compelling factors support the case for Bitcoin reaching $100,000 or higher in 2026. First, the lingering effects of the 2024 halving continue to create supply scarcity. With daily new Bitcoin issuance halved to about 450 BTC and demand potentially rising from institutional players, prices could face upward pressure. Historical patterns show that the most significant gains often occur in the second year post-halving. For instance, in the 2020 cycle, Bitcoin gained 594% in the year following the halving, peaking 18 months later. According to BitPay's analysis of past BTC halvings, the 2020 halving saw prices from $9,134 to a peak of $67,549, a 594% increase. Applying similar dynamics, 2026 could see a rally from current levels. Institutional adoption remains a key driver. Despite recent outflows, net ETF inflows for 2025 were positive at $14.2 billion, and firms like BlackRock and Fidelity continue to hold significant positions. Pension funds and endowments are increasingly allocating to Bitcoin, with Harvard's endowment maintaining exposure despite trims. According to CNBC's report on Bitcoin's price today, ETF flows are down but aren't signaling crypto winter investor panic, with net inflows remaining positive. If inflows resume, potentially spurred by rate cuts, Bitcoin could see renewed buying pressure. Analysts like Tom Lee from Fundstrat predict $250,000 by year-end, citing increased allocations and sidelined capital. According to Yahoo Finance's article on why Bitcoin could surge 184%, Tom Lee forecasts Bitcoin at $250,000 by year-end, implying a market cap above $5 trillion. Macroeconomic tailwinds could accelerate this. The Federal Reserve's potential for further rate cuts in 2026, with odds for a 25 BP reduction in March at over 60%, would reduce borrowing costs and encourage investment in speculative assets. Lower rates historically correlate with Bitcoin rallies, as seen in 2020-2021, when near-zero rates fueled a 590% surge. According to CoinLedger's guide on how interest rates impact crypto prices, low rates increase risk appetite, lifting Bitcoin. Additionally, a weakening U.S. dollar, with record short positions on the USD index, could make Bitcoin more attractive as a hedge. According to CoinDesk's market report, dwindling U.S. inflation and lower real yields offer tailwinds to Bitcoin. On-chain indicators bolster the bullish case. Bitcoin's hash rate is near all-time highs, indicating network security and miner confidence. Stablecoin market caps at $307 billion suggest capital waiting on the sidelines, ready for rotation into BTC. Whale activity shows accumulation, with 53,000 BTC added recently, shifting supply to strong hands. According to VanEck's blog on what triggered Bitcoin's sell-off in February 2026, RSI on Bitcoin futures fell below 21, an oversold level signaling potential rebounds. Prediction models from sources like Changelly forecast an average price of $134,174 for 2026, with a maximum of $153,147, supporting a path above $100,000. According to Changelly's Bitcoin price prediction, the average trading price might be $134,174 in 2026, with a maximum of $153,147. Pro-crypto policies under the current U.S. administration add further upside. The nomination of figures like Kevin Warsh, while initially causing volatility, could lead to clearer regulations, unlocking more institutional capital. According to Seeking Alpha's article on Bitcoin's battle at $70K, regulatory stalls weigh on prices, but potential Clarity Act passage could reverse trends. Combined with growing adoption in emerging markets and as a corporate treasury asset, e.g. MicroStrategy's holdings, these elements paint a picture where $100,000 is not only possible, but probable in a favorable environment. Bearish arguments: why Bitcoin might not reach $100,000 in 2026. While optimism abounds, several risks could prevent Bitcoin from hitting $100,000 this year. Persistent macroeconomic headwinds top the list. Core inflation remains sticky at 2.5%, and the Fed's cautious stance on cuts, potentially delaying easing until data weakens further, could keep liquidity constrained. Higher for longer rates make safer assets like bonds more appealing, diverting capital from speculative ones like Bitcoin. According to Daily Forex's BTC USD signal for February 18, 2026, the headline CPI dropped to 2.4% in January, but core remained at 2.5%, prompting Fed caution. If rates stay elevated, Bitcoin's correlation with tech stocks, currently 93%, could lead to further downside amid broader market sell-offs. Institutional retreat is another concern. ETF outflows of $8.5 billion since October 2025, including $410 million recently, signal waning confidence. If this trend continues, with big players like endowments reducing exposure, demand could falter. According to VanEck's report on Bitcoin's February sell-off, ETF flows have slowed, with $700 million outflows this month alone. Miner pressure adds to this. Bitcoin trades below estimated mining costs of $87,000, prompting sales to cover expenses, increasing supply. According to MUFG research, it is currently trading below the estimated mining cost of roughly USD $87,000, putting additional pressure on miners. Geopolitical risks exacerbate volatility. Ongoing conflicts in the Middle East and Europe have heightened risk aversion, with Bitcoin failing to act as a safe haven during recent events. According to the Economic Times' report on BTC crash, renewed geopolitical risk tied to Middle East tensions contributed to the decline. Regulatory uncertainties, such as stalled Clarity Act legislation, keep institutions sidelined. According to BBC's article on Bitcoin's downward trend, Deutsche Bank analysts noted declining interest from traditional investors and growing pessimism. Technical indicators suggest potential for further downside. Bitcoin has rejected $70,000 multiple times, forming a bearish symmetrical triangle, targeting $60,000 if support breaks. RSI is oversold but could signal prolonged weakness, with volatility compressed at 38. According to Seeking Alpha's technical analysis, a confirmed bearish symmetrical triangle breakout suggests a move towards $60,000. Predictions like Kraken's conservative model forecast $66,381 by end 2026, with 5% growth below $100,000. According to Kraken's price prediction tool, the Bitcoin price prediction by the end of 2026 is $69,486.9, with a 5% growth rate. Doubts about Bitcoin's utility as a hedge persist. With it underperforming gold, up 61% yearly, and correlating with risk assets. According to CNBC's Bitcoin Price Focus, growing doubts about Bitcoin's practical utility as a hedge against inflation. If these narratives strengthen, $100,000 may remain elusive. Expert predictions and model forecasts for 2026. Expert opinions on Bitcoin's 2026 price vary, but many align above $100,000. Tom Lee of Fundstrat predicts $250,000 by year-end, citing pension fund exposure and sidelined money. According to the Motley Fool's prediction article, Tom Lee forecasts Bitcoin will hit $150,000 by the end of 2026, potentially surging 184%. Ripple CEO Brad Garlinghouse sees $180,000 per Reddit discussions. According to Reddit's thread on 2026 Bitcoin predictions, Ripple CEO Brad Garlinghouse predicts Bitcoin will hit $180K by 2026. Algorithmic models from Changelly forecast a minimum of 130,516s, average 134 of 174, max 153 147 pounds. According to Changelly's blog on Bitcoin price prediction, the average trading price might be 134 out of 174 in 2026. Binance's yearly forecast suggests 85,283.54 bar by 2031, but monthly highs up to 133,718 in 2026. According to Binance's BTC price prediction, for May 2026, Bitcoin price predictions indicate a minimum of 94,649.36 and high of 133,718 in 23. Axie's consensus clusters between $100,000 and $230,000, with some models like the Bitcoin Rainbow Chart projecting $300,000, $500,000. According to Axie's Bitcoin price predictions, most forecasts cluster between $100,000 and $230,000 for 2026. Mark Yusko's crypto predictions via YouTube Shorts target $180,000, $220,000. According to the YouTube short, Bitcoin, a realistic price prediction for 2026, Mark Yusko predicts 180, 220K by end 2026. More conservative views like Kraken's 5% growth model see 66,381. According to Kraken's forecast, the predicted Bitcoin price for 2026 is 66,381 Overall, the weight of predictions favors above $100,000, but with caveats for volatility. Realistic scenarios and investment considerations for 2026. Considering the bulls and bears, 3 scenarios emerge for Bitcoin in 2026. Bullish scenario: Fed cuts rates 3 or 4 times, ETF inflows resume at $10 to $20 billion, and adoption surges. Bitcoin hits $150,000, $250,000, surpassing $100,000 by mid-year. Probability: 40% per optimistic models like Tom Lee's. Base scenario: gradual easing with 1-2 cuts, stabilizing markets. Bitcoin recovers to $100,000 $130,000 by year-end. Probability: 50% aligning with Changelly's average. Bearish scenario: no cuts or hikes, prolonged risk-off. Bitcoin drops to $50,000 $60,000. Probability: 10% if geopolitics worsen. For investors, focus on risk management. Dollar cost average into dips, allocate 1 to 5% of portfolio, and diversify. Use hardware wallets for security. According to CoinLedger's guide on interest rates and crypto, long-term holders benefit from cycles despite short-term pain. Monitor Fed meetings, CPI data, and on-chain metrics like RSI for entry points. In conclusion, while challenges exist, the balance of evidence supports Bitcoin potentially hitting $100,000 in 2026, driven by scarcity, adoption, and policy shifts. However, cryptocurrency remains speculative. Invest wisely.